Coming to the final quarter, despite several geopolitical flashpoints slowing US economic growth and the upcoming US election, we remain broadly positive. Why? Well, it's true that market uncertainties are rising, but fundamentals are still in good shape, with strong earnings and the Fed starting to cut rates, adding to the momentum. There are still many opportunities to put our cash to work, which are summarized in our 4 investment themes. So let's see what they are. US economic growth will be slowing but not stalling, backed by falling interest rates and long-term structural trends, and the fact that US equities represent 2/3 of the global equity market capitalization. They should remain key to your portfolio returns. But further opportunities are emerging elsewhere too. Momentum is gathering in the UK, a cheap equity market which is benefiting from improving consumer confidence and political stability following the recent election. Asia's dynamic growth should also reward further diversification led by strong fundamentals and structural opportunities. We're most bullish on India, South Korea, and Japan. Although technology still leads the charge in the US, other sectors are also showing promising earnings growth. We think communication services, financials, and healthcare will benefit from AI-driven efficiencies and lower borrowing costs, whilst the trend of re-onshoring is positive for industrials. In Europe too, tech innovation has powered the rise of large companies across multiple sectors, particularly IT of course, but also healthcare and energy. Meanwhile, strong earnings projections in Asia lead us to favor company leaders in technology, communication services and industrials, which we complement with some defensive sectors such as consumer staples and utilities. Broadening sector exposure within and beyond technology still requires careful stock selection. We prefer medium to large cap companies with strong market positions, healthy balance sheets, and a drive for innovation. As inflation has come down and economic growth is moderating, the Federal Reserve is joining other central banks and embarking on its rate cut cycle. So holding cash will therefore become less attractive, and bonds are important as both an income generator and diversifier against uncertainty, helping investors stay invested whilst managing portfolio volatility. As we believe the rate normalization process is likely to be gradual, it is not too late to lock in current yields near multi-year highs. We continue to favor investment-grade bonds of 5 to 7 year duration, both for their attractive yield pickup and resilience amid slow but positive economic growth. We also like Indian local currency bonds for their attractive yields and strong inflows. Alternatively, a multi-asset strategy, which is exposed to a mix of equities, bonds, and other asset classes, can also achieve diversification with the help of professionals. Sustainable investing is a huge area of activity as the world strives to reduce carbon emissions substantially to achieve carbon neutrality by 2030. The US is acting to match traditional pioneers like Europe and Asia in this area with renewable demand in the US at record levels and unprecedented growth in solar and electric vehicle sales last year. China, meanwhile, has taken the lead in global energy storage. We see investment opportunities in sustainable energy, including renewables, hydrogen, energy storage, and carbon capture. And in addition, the erosion of biodiversity is exerting a growing influence on government and corporate policies. Those who can harness and preserve biodiversity could therefore offer long-term growth opportunities. In summary, we believe this quarter offers new scope to broaden investment exposure and seize opportunities across a wider range of markets and sectors. However, caution is needed to navigate the economic and political uncertainties ahead. A well-diversified portfolio or a multi-asset strategy with a focus on quality is vital to help you make the most of those themes. And our team, of course, is on hand to help you.